Hi, everybody. My name is Michelle Dervin. I'm a principal on the investment team at Rethink Education, and I'm delighted to be your moderator for this discussion this morning on seed, accelerator, and VC funding in ed tech. I guess, first of all, why is this an important topic? I think the world of venture capital can often seem like a black box, particularly to first-time founders. The jargon around investments is confusing, and it can be difficult to navigate all of the various funding options that are out there at the early stage, let alone figure out how you actually get access to those dollars, right? So our objective with our time here today is to demystify the early stage funding process and share some thinking about where dollars are likely to flow in 2018 and tips for founders who are looking to fundraise. So we have some amazing experts who are here on the stage, and I'm going to introduce them in just a moment. But I think what would be really helpful to them and to me also is to get a better understanding of who's in the room and who are the members of our audience today. So I have a few questions for you, and hopefully you'll oblige me with your responses. So who here has had a great idea and started a company? If you could clap for me. Okay. And who has so far successfully raised VC funding? Clap. Okay. Okay. And hopefully you're not too polite for this, but I want you to give me a boo if you have in the past or are right now frustrated and confused by the fundraising process. Any boos? This is a polite audience. So anyway, if you have those frustrations, hopefully we'll be able to address some of them for you today. So before we kick off the discussion, let me introduce you to our esteemed panelists. We have Deborah Quazzo, who is the managing partner of GSV Acceleration, a venture capital fund investing in dynamic entrepreneurs and companies in the global education and talent sectors. And Deborah is also the co-founder of the annual ASU GSV Summit, which is now in its 9th year. Patrick Brothers is CEO of Navitas Ventures, which is the education venturing arm of Navitas, one of the world's leading education companies, which partners with universities across, the list is quite long, across Australia, Asia, North America, Europe, the Middle East, and Africa, so basically everywhere. Jean Hammond is partner at LearnLaunch, which operates an accelerator program and incubator campus for early stage ed tech companies, as well as the LearnLaunch Institute, which convenes the EdTech community and organizes the annual LearnLaunch Across Boundaries conference. And finally, we have George Strashnoff, who's the managing director of Bisque Ventures, an early-stage venture capital firm focused on accelerating growth for EdTech companies in the higher ed and corporate learning spaces. So without further ado, we're going to kick off with some questions to fuel our discussion, and we're going to leave plenty of time for questions from the audience as well, so get your thinking caps on. So Deborah, maybe could you kick us off just quite a general question for founders in the audience. Is this a good time to be raising ed tech capital?
Well, I think for great ideas and great companies and great, importantly, leaders, entrepreneurs, founders, it's always a great time to raise capital. I mean, there's certainly, it's hard to miss the fact that the serious interest, not just sort of the passing or sort of fanciful or even sort of philanthropic interest in education, the very serious interest in investing in education and talent solutions is there in a way that it hasn't been there ever. And I think there was a lot of so much skepticism, and certainly the skepticism is not gone. But and we have companies that need to prove themselves and continue to have exits. Although we've had quite a few great exits this year. So I think it's always a good time if you've got a great leader and a good idea. So I think you can certainly look at cycles, and there's lots written about the pullback in the seed and A-round stage investment. We've done a bunch of research over time, kind of looking at the K-12 sector versus the higher ed sector versus the corporate sector, and sort of generally, looking at sort of flow through health. And we're actually about to embark on kind of doing a refresh of that analysis. But I think, so certainly there are ebbs and flows in seed and A-round availability, but I do generally believe great companies and great entrepreneurs get funded.
Mm-hmm. And so where are the dollars flowing to and from right now in ed tech?
I would probably say that right now we're seeing a little bit of extra company formation in talent and workplace ed tech, and quite a bit of interest there. Although some of the business models are probably not fully proven yet, so that's interesting. We also are seeing for companies that do get across to a healthy A level of operation that there's quite a bit of capital pooled at the A level that's available. What we continue to see is trouble getting people across that capital gap healthy enough. So they get across, but they've been doing it on such low dollars that instead of showing a growth profile, they're showing some type of staying alive profile, and that's not inspiring to the investor. So we do have a little bit of a capital gap at the seed, but we continue to have relatively good health at the very early stage from angel and accelerator and very, very small venture groups supporting those companies. It's often local capital, which is probably good because the local capital can often bring a little bit of access to local talent. Oh, you need somebody to sit down and think about pricing with you. We know just the person. You need somebody else. So that's part of the value prop there, and it does work. But again, we have a bit of starvation across that capital gap. I've sometimes said that lean startups are good, but anorexic ones are bad.
Top down. We've seen, I think it's about $4 billion at the moment per annum going into EdTech. 50% of that looks like it's early stage. $1 billion in the US-ish, plus or minus 100, 200 mil, depending on what year you're in. $1 billion in China, and China's growing, really, really fast. Some big deals in the last year that are, arguably outliers, but a lot of seed stage investment there. Southeast Asia is really picking up steam as well. Africa's making a really, really early start, not putting much of a dent in the dollars. So, yeah, I mean, it's a maturing industry.
And so, we did see this big increase in investment from Chinese investors in EdTech this year. What does increased investment from investors outside of the US and also the increase in companies that are scaling, overseas EdTech companies that are scaling, what does it mean for companies here in terms of opportunity or
well,
competition?
I just say we just did an event in Beijing. Patrick was there, my comrade here, but which is fascinating. But I think the move of particularly Chinese investors like TAL and Tencent and others into outside of China into companies in the U.S. I think Circa is one of my angel portfolio companies. TAL has just invested there. Wonder Workshop is an angel company. Tencent's just invested there. I think the extremely exciting part for me as an investor of that is that they aren't, Chinese companies don't really need to move outside the Chinese market because the numbers are so large that, why would you bother? What they're really trying to do is adopt technologies that entrepreneurs in the U.S. and other countries are developing and bring them back into the Chinese market. And that's as a standalone U.S. company like Think Circa, which is based in Chicago, to go into the Chinese market would be quite a daunting and probably impossible task without an investment partner. So I'm extremely excited about the same thing for Wonder Workshop, which has a physical product, and they're moving into the Chinese market in partnership with Tencent and others. Homer actually is another great example, Neil Shenoy, who has gotten outside dollars as well. So I think it's a really exciting thing because I think for the first time you begin to see startups in the U.S. market thinking outside the U.S. market, and I think that's critically important for the success of sort of companies, and particularly companies that are held back by distribution systems in the U.S. that are not highly scalable. So I think it's crazy exciting from an investment, and from a company, and from a proliferation of your product perspective.
There's some easier ways to start too. we invested in Matt from Paragon One, who just pitched
Yep.
before, right? Who's doing online career coaching. Most of it, for the moment, is focused on students from China studying in the US, and so you have to have an intimate understanding of what's happening in the China market, but still leverage that kind of domestic offering, if you like. So that's an easier way than, like you say, trying to take a US product to the China or a China product to the US, which is much more difficult.
So we've seen then that deal volume overall, dollars are flowing this year and they're up over last year, which was kind of down overall. And then we're seeing increased activity and increased investment in ed tech and overseas markets. What about from kind of like a sector or stage focus? So, what about investment dollars flowing into K-12 versus higher ed versus workforce and corporate? And, for instance, like what have you guys invested in yourselves this year?
I think that we're definitely seeing the K-12 market start to act a bit like a market, which is good news, except for it's not necessarily good news for the startups that have too narrow a point product, because the buyer community, and again, it hasn't fully emerged yet, but it looks like they're going to be looking closer to solution products. So it may be a time for companies to get together, to co-market, to get their story ready for that more solution-oriented buyer in the K-12 space. And so, I think that's good news. I think in workplace ed tech, I already said that we just see quite a bit of company formation. Because you're selling to corporations, of course, market adoption's a lot faster, and so that feels easier to investors. And it's an important problem to be solved as we look at training and skill matching and retraining the workforce. So it feels like it has great impact as well. I think the higher ed space is probably the place that's a bit confused still. We still see a lot of little things. We sometimes use the word the 20K Band-Aid, where lots of little departments go and buy little pieces of things, and real models for what higher ed's going to do besides online maybe haven't fully emerged.
George, what would you?
Yeah, so we're exclusively focused in higher ed, and we've seen actually, I think Jean says it well, there are sort of spot solutions. It's good for us because we have a strategic focus. So we have a value chain that serves higher ed, the full student life cycle. So that's actually a good thing. Where we're getting involved a lot is in, it's come out of incubation, angel stage. Maybe they raised a small seed round, they didn't raise enough. They're not quite ready for the A, they really haven't scaled, they've had difficulty getting into that market. It's very fractured, it's fragmented. People really don't think about how that market is differentiated, so they just think of higher ed as this big edifice. And then they realize there's some very different people to sell to. So we get excited about those companies because they need another $1 million, $1.5 million to properly go after the market. They've got some great pilot accounts. They've sort of learned how to speak to higher ed, but now they really need to scale, and they're not quite at a revenue level where folks want to give them large dollars.
Yeah.
And so that's been a great opportunity for us in higher ed. I think fewer deals, K-12 still seems larger, generally speaking, but still some great opportunities.
So we see a lot of companies in higher ed who are doing kind of like $15,000 to $20,000 deals per school. But in their plan to scale is that they're going to radically increase that contract value. And what do you think about that? Like, is that something that's feasible? It's definitely something that I see a lot of companies struggle with.
Yeah, the whole land and expand, I think, is quite right. So it's often difficult, I think, to get in and have a conversation with a provost or with a senior manager in higher ed. But you can often find a dean, or you can find somebody within the bureaucracy of the back office that will be frustrated by something. Maybe will have a conversation with you. But often that leads to a $15,000 or $20,000 annual license. You're not sure how strong that adoption is. You don't really have the resources to go in and manage that account. So I think that is the challenge. But the hope is if you can do that and do that well and really demonstrate value to the institution, they'll tell their friends, they'll tell the other deans, they'll tell other folks who are involved, and ultimately that will grow into an enterprise. I think that's the promise, certainly coming out of OPM, where we would do these large enterprise licenses that were 10, 15 years in length and big dollars. We would kind of envelop the entire institution. That was our goal. Those tended, I think, to get more attention than a small provider who is going after a very spot solution. And so I think that is one of the great challenges. And we encourage folks to get in there to do a really good job on implementing, build strong relationship, be on campus as much as possible, really have a strong client management as well as sales focus. And ultimately then, if you do a great job, you can get folks within the academy to talk to each other. And then ultimately, if you do well with one school, the schools tend to talk. And that's really kind of the growth strategy.
So it can be done, but it's an investment of time, basically.
Yeah, absolutely. And I think it's hard for a startup with limited resources. And that's why I think we're seeing they need an extra $1 million, $1.5 million to now grow that sales team. They've got a couple of good deployments now. They need to scale that and get to a large enough critical mass that other schools start to see them and hear about them and want the same thing.
And I think we will see more of the departments buying together when the solutions work well together in the future. I just don't think that it's mostly emerged yet. And again, if we're talking about the green quad colleges, there's one type of buying, and if we're talking about the urban community college, we have a completely different buyer. And I think that's back to George's point, which is that we just have so many different buyers, and for some reason people have their brains stuck on the entrepreneurs sometimes, and also just the industry in large, and talking about it on the fact that it's not, they think of it as one thing, but this is not true. This is a really complex market that's going to undergo a lot of change. It's just when, how fast, what color.
Yeah, actually, fast, I think. Because, look at what's happened this year. You just had Cengage announce a subscription offering. It'd be fascinating, right? We've had Newton announce the ingestion of an open source product to take their platform, become a Newton proprietary platform with open source content. I think what people have been waiting for in terms of the dislocation of the traditional publishing sector, which is being, I think we finally hit that moment. So I actually think the opportunity for new ideas, for new companies, you've seen John Katzen, I'm sure, is wandering around here somewhere with his Noodle, just announced this week that he's got an accreditation partner out at Claremont, with Claremont Graduate College, on a whole new, his whole new model around the OPM business.
Right.
So I actually think the sector, if you really step back and think about, they've had seismic changes have occurred this year. Look at the success of Chegg. Chegg really took off around, Chegg had been suffering as a public market company because they had so many changes they had to do in the full light of day as they migrated from a physical to a digital product. Today, the company is hit the cover off the ball. The stock has really started rising in March and the spring. Always remember, because Dan Rosenzweig was at our conference, and he was finally as happy as he could be. But really interesting, because Chegg owns the last mile, right? Publishers don't own the last mile. Publishers don't own the student. Chegg owns the student. So I think there are all these really interesting dynamics happening in higher ed that have finally come to the forefront. It finally happened. That make that market. I think there's always been, as we've done a whole bunch of studies historically, there's always, for whatever reason, been just a lower number of startups in the higher ed space. However, there's been a much higher success rate for those startups. So, smaller amount of seed funding, but very good follow-on into ABC, relative to K-12 in particular. So it'll be interesting to see if that dynamic changes now that the market has changed as dramatically as it has, or is in the process of changing as dramatically as it has. And I think the other place we're seeing tons of stuff is ideas around financial aid. How do we improve the cost equation for students? We're seeing that both from the enterprise side, because there are all kinds of companies being created to help enterprises deliver student loan benefits in different forms as a corporate benefit. So you're seeing it from that end, and you're seeing it from the other end. We're an investor in a company called Raise. That creates micro scholarships for students in high school, and then that's having great success. Is seeing they just launched a transfer college product that has had incredible success in its first 8 weeks of launch. So I really am quite excited about the opportunities in higher ed, and just given the pace of change that's occurred here in the last year.
And so on that point, one of the questions that we get a lot, from founders is, should I pursue a partnership with one of the publishers, knowing what we know about what's happening with all of the major publishers right now? Any predictions on what we're going to see? What's the future of the publishers? And should companies commit time to a partnership to access distribution?
Paid off very well. If you look across Newton's a good example. I think it's hard, and I don't think it's necessarily about the change per se. But I think it's just hard because when a partner has a clear agenda, and that maybe the startup has a clear agenda too, it just makes it more difficult. So I think you have to kind of, I don't have to think about it, but Blackboard, you go back to Blackboard, the reason Matt and Michael were so successful, they were the only people, I think, who actually they got Pearson, I mean, at the time, they gave all the publishers were their investors and their partners, and that was the way they had a winning strategy using publisher partners, was to get them all not to have a single one. But that is like the one that still sticks out in my brain from 15 years ago.
You've got to be cautious of what you think you're getting when you partner with a strategic. And I say that as a
strategic.
And we have this conversation all the time. Where a startup says, "Yeah, but if we partner up and da da da," it's like, "Gosh, it doesn't work like that." And
so, what are the tips? What are for people in the audience who are considering, would love access to the distribution that a company like yours could provide?
I think I caution when it's about distribution. We always encourage the team. Well, firstly, there's a bifurcation conversation, which is Navitas as a customer. We say, "You're talking to the wrong person. Go and talk to the team." Navitas as an investor, that's a different conversation. We talk about a triple benefit test, and we say the first test, the most important test, is you have to be awesome on your own. What you're doing, how you're doing it, your value prop, understanding your customers, that has to be in place. Yes, we have to be able to, as part of the second test, help you go faster, but we actually think most of that's a knowledge and relationship advantage. So that time spent navigating a university to find out who to talk to, we can definitely cut that down enormously or get a meeting. Mm-hmm. But support beyond that. It's hard also to mobilize a core business which is trying to do its own thing as well.
I would actually argue that one of the things that the publishers, as an example, have not done a very good job at is thinking globally when they think about distribution, because in some cases there are some pretty interesting products coming out of whatever geography that would be valuable in another geography. And that's just been both a limited view on the mindset of the entrepreneur. I think in the China conversation we heard earlier, right, many times the U.S. entrepreneur is so fixated on the Byzantine K-12 and higher ed environment they need to sell into in the U.S. that they've never even bothered to do an analysis of the other markets. And the markets might be cleaner, slicker, and it may be that the knowledge that the strategic could bring would be really valuable. But you have to figure out that that's what you're going to have a conversation about, and then you have to figure out what the resources are to really do it.
Yeah, and whether
and
it's
if they're tiny, they won't have the resources to do it. So
Right.
imaginary deals don't work.
Whether it's a strategic or a fund, I think the startup's got to test, are these guys committed to me? If it's just about writing a check, then it's a whole different ballgame to, is there something beyond the capital that these guys are going to give me? Strategics and funds, definitely different kettle of fish, but that's what I challenge all those teams to challenge us and to challenge all the others. Don't just go looking for capital.
Mm-hmm. I was going to say, the reason we set up a strategic fund was because as a large organization, we couldn't move fast enough to see all these different startup opportunities and engage with them and look for adoption or potential acquisition opportunities. So we set up something separate so we could get out there and be nimble and participate. Clearly, there comes with that a knowledge base and an understanding of the market that is incredibly valuable to the startup founder, and we invest that heavily with my time and resources and so forth. There's always the adoption opportunity, there's the pilot opportunity, but I'm very mindful that I don't promise those kinds of things to founders, because that's a separate operation, and they're running hard and they're doing what they need to do every day. So ideally, I'm investing in things that I know will really help the industry, and as an industry player, ultimately that should help us. In my role as strategy officer for the company for a dozen years, we were constantly looking to the outside to see what can we learn, what can we adopt, what can we use. And so now, as an investor, we have the ability to participate, but I can be much faster in doing that. And so I'm careful not to promise that to the investments, but certainly if what they're building is strong and has the ability to scale and do great things, that adoption opportunity is definitely there.
Got it. So it's all about managing expectations and kind of going into the
Absolutely.
partnership with your eyes wide open. I do want to get on to asking you some questions about tips for founders, because I think that's what's most interesting to the audience today. But while we're on the topic of strategics, I can't help myself but ask you all about, what's your view of the, increasing role of the major tech companies in education? We saw the New York Times do some pretty scathing pieces this year about, Google and Apple and, some of the tactics that they've used to build market share. How do you think about the role of Google, Apple, Facebook, Microsoft, Salesforce in education? Is it a good thing or a bad thing? And how should startups be thinking about this? Is it an opportunity for them?
Well, what do we know? What we know is most, except for Google Classroom, which is a resounding success, and the associated products, we haven't seen the major moves yet if they're going to make them. And so, I think they're going to be watching with some great care, and they're going to be watching what is. I would probably say that what we're about to enter into is the edge of the world of platforms for various solutions, and we're seeing it mostly show up in private equity roll-ups. They're not always entirely clear. It's not always entirely clear what their strategy is, but it does seem quite clear that this will continue. And then the question is, will that lead to a deeper understanding of what is a niche that one of the majors could effectively operate in that was outside of their normal line of business?
Yeah, I think-
And again, we've seen people get burnt there, so I think they're going to be quite cautious about how they enter this market.
Yeah, but I mean, it's, thank goodness. I mean, think about Google Chrome, how it transformed the class. I mean, what it did to transform K-12 education overnight, right?
Overnight.
Made it affordable, it is, from a hardware perspective, had that not happened, all the companies that are now seeing success in K-12, I think, would be dealing with a very different dynamic, because it increased accessibility in the classroom for technology. The iPad, I mean, was not the same, pricing attraction, but certainly was a transformative technology and delivered in various formats. So I think from the hardware side, I think they have really changed the dynamic. And yeah, I certainly read the New York Times pieces and whatever, but I think the dynamic is forever changed because of their entry. I think the interesting question will be when you really go from a hardware kind of thing to data, right? And so as the data applications become more serious, and they are quickly, getting through assessment or whatever, then the big players like IBM and others who can bring their wherewithal to those products. And I think that's where it kind of gets interesting to see how they play it. Obviously, players like IBM have been involved for a long time, providing serious analytics in districts and states, et cetera. But we haven't seen them make a big move. But I think, to me, it's kind of that whole area. It'll be interesting to see. Even so, yesterday, a district had a pushback on the Facebook summit delivery in a district somewhere, which was anyway a little bit of a head scratcher, but it's interesting. So I think it's education. So we're going to have tension and dynamics around the people who are commercial providers coming into the system. So I think that's a dynamic that's hard to avoid at some point.
Yeah, the student as well, you think about the evolution of kind of bring your own device as an example of, used to be an institution that you just turned up and, everything, you got an email address, you got all the textbooks and everything that you needed, and increasingly it's, the student or the customer who is saying, no, I need to take my device or whatever, my identity, my skill set, my portfolio with me. Mm-hmm. I'm not parking my portfolio with you and then moving on for that, setting themselves up for the lifelong learning. And the tech companies have that kind of aggregation and reach, and they're in our homes and in our pockets, and so it's going to be really interesting. And if education's anything to go by, though, it'll take some time to play out.
I think I would be remiss if considering I have 4 captive VCs here on the stage, I think I need to ask you some questions that might help founders in the audience figure out how to approach you and whether they might be a good fit for your fund. So a couple of questions around like how should people in this room approach getting on your radar if they're out seeking early stage funding?
Well, as an accelerator, we have a open application process when we're open, and we're not open right this minute, but we will be across the new year, and so and we see lots and lots of applications. We think really hard about which companies can move along. We now have 2 programs, one for sort of the traditional early stage, and one that we call Breakthrough, which is designed for companies that are getting closer to that scaling stage and need to start thinking about partnerships and scaling. And it's a shorter program designed more for remote interaction and partnership creation.
So when is the right time for a company to think about an accelerator program?
Well, an accelerator, I think, for the standard, what we call Boost program, is somewhere in market entry. You need to have the product in use. You need to be able to tell about why it solves the need, and have your customers tell why it solves the need. And that's when the smorgasbord of resources and all the mentors can be the most use for you. And then at the breakthrough stage, maybe $500,000, $750,000 of revenue, and that's a point when really thinking hard about what is the future of this company and how does it really fit into the market can make a big difference. And so those are our two entry points.
And for the other panelists, so when is the right time for a company to approach you, and how do you source companies? Are you looking at all of the accelerator programs, and what are the other ways to kind of get on your radar?
We have we recruited 2 people from every country where Navitas has operations, which has given us we call them venture scouts. So we have 100 venture scouts in 50 countries around the world, and they're, if you like, our first line of screening. They're not venture capital guys, but that's why they're awesome, because they just want a normal conversation. What's the problem you're trying to solve? And those venture scouts, if you like, screen ideas and then feed them through if they think, yeah, that's something that we talked about on our last webcast, and come through. And any time is a good time. If we're trying to prescribe the timetable, it's the wrong way around. Our preference is whilst all the metrics and discipline is important, our focus is about people and relationships in the very first instance. And if that starts to stack up, then we'll start to peel the onion and get into the business model and things like that.
And what stage are you investing at?
Early stage. I mean, we've done a $5 million check this year, but it's generally $200K.
Got it.
mil.
Okay. Great.
Yeah, I'll steal it. I like the scout thing. I may have to change my name. Yeah, so we basically, because we have the ASU GSV Summit, which is where we really invite 400 technology CEOs to present, global technology CEOs. Patrick's been a great partner. We are constantly scouring the market and making out. We get lots of inbound, but we're making lots of outbound too, for all stage of company that is doing sort of transformative, transformative approach. What's pre-K-12, higher education, learning and talent in the enterprise. So we're constantly scouring. Every week we speak to probably 10, 15 companies, really for the purpose of screening for the ASU GSV Summit, which is relatively full up at this point. But if someone here would like to apply, we'd be delighted to just shoot me an email, and we can put it through. And then through that process, we actually screen for investment as well. But our so it is a broad scouting effort for the benefit of the summit, and then investment comes off that process as well.
Yeah, it's been really helpful. I think conferences like this are certainly very helpful. The accelerator programs, we found it very helpful to affiliate with a variety of different accelerators and seed funds and so forth. I'm really a higher ed operations person masquerading as a VC, and so what I find exciting is to meet companies focused in higher ed that have really good ideas, really good problem statements that they're trying to solve for. I'm not necessarily scared away from a feature set and sort of a problem. It doesn't necessarily have to scale to be a gigantic business in the first couple of years. And we can be really helpful in that conversation of trying to understand what the problem is, how they're seeing the problem, how we see the problem, and how we can maybe come together and really solve for it. So we tend to have conversations that can span months where the founder will just reach out and say, this is what I'm doing. They don't necessarily have to be raising money right away. But I get really interested in the operational value of what they're doing. And often that's, there's a pitch deck and there's I'm going to show you the hockey stick and, you want to give me money. And let's not talk about that. Let's talk about, who you are, why are you doing this? What is the problem you think you're solving for? Why are you doing it differently? There's a lot of others typically. I mean, there's usually 3 or 4 others that are doing more or less the same thing. So what's unique about you? Why do you think you're going to win? And usually it's about 2 or 3 layers of peeling back that onion to get to what's really driving them, what's really exciting, what's really unique or different.
Where's the fire?
Yeah, and into that conversation, there's either rapport or there's not. And we get to a point where it's like, yeah, we recognize this is somebody that I would hire into my organization and put them to work on this problem. But we're going to do it through venture investment rather than doing it through hiring them. And if I get to that point, then that's pretty exciting and it's pretty easy. So we're writing relatively small checks, pretty early stage, trying to solve specific problems.
So one tip there is to, invest the time in getting to know the VC, basically reaching out before you're actually actively fundraising, right?
Yeah, I'm certainly happy to have that conversation. I think we want to know that there is some traction there. It doesn't look like something specific, but certainly it's helpful if there's a couple of schools that you're working with, if you've got some implementation, some pilots. Doesn't need to be a ton of revenue, but you need to show that you have the ability to not only build a product and have a good idea, but to get out there and get somebody interested in it and actually install it and make it start to work. I think that's super helpful. And then at that point, we're really helpful in helping that to scale.
And so any other tips for founders that are out fundraising from our panelists, or pet peeves, things that really turn you off?
Don't tell me that you're the only one that's solving the problem, because I can guarantee you that about 10 people have come to see me in the last 6 months who are also addressing that problem in some other way.
Yeah, I would absolutely follow on to that. I think very often you'll see the competitive page is like 3 giant public companies and then you. And we do it better. And it's like, come on, that's a little disingenuous. We know that there are a lot of other startups. And if you think that by not telling us about the other startups, we're not going to invest in them, we've got their decks as well. So I want to know that you know who your competition is, and I want to know that you have figured out why you're better, and be able to tell me that story because I have to make that decision. I have to decide who I'm going to invest in amongst 3 or 4 startups. I want you to be able to help me make that decision.
So I think that we actually have time for just a couple of questions from the audience. So let's open it up. We have a microphone here at the front of the room, and we have a question just over here, 3 rows down. If you want to just try shouting it out, that's probably fine. Yeah.
We invest across what we like to call the pre-K to gray landscape of learning and talent. So really,
yeah, I think the ed tech investor is interested in learning and education, and even the transformation of the institutions involved in that. And the problem comes when you're trying to talk to classic venture that doesn't understand the growth style of the education market.
Yeah, I think so. I mean, ESL is a good example. Our study of the landscape, we found 26 kind of clusters, and I think that's the challenge, is finding an investor who really understands education, or understands, might come from K-12 or come from higher ed and doesn't understand that spectrum. But we're definitely looking at this whole thing, and I think we talked a little bit about it. I know Gene's looking at it. It's really starting to push into workforce, and Deborah as well with pre-K to grey. It's really, the definition of ed tech is problematic in itself, in that we're trying to address bits that we wouldn't normally call ed, but are increasingly about learning.
Unfortunately, I think I may have left our time a little too short for questions. I got too engrossed in the conversation. I hope that this has been helpful for you all, and happy to speak offline. I'm sure our panelists will also be happy
Absolutely.
to speak offline. So thank you so much for participating today.